Hi, everybody. This is Gary Dean, and this is our another video report for Monday, March 14th, 2000. Actually, 14th, 2016. Pretty much a really boring day today. Especially with the S&P, we were just kind of jockeying around a little bit and closed down a couple points, and that was it. I really think just to go over, we have all of our bearish divergences. Nothing has changed. We have the S&P that is right at the trend line right there. So if the bears are going to push it through, they need to really take a stand right around here and start pushing things lower. But really, the big thing today, I think, is the Dow Jones, because you can see we've been up 1, 2, 3, 4. This is the fifth week right now we're on. But notice where it hit. This is a weekly chart, and this is the 200, I believe, 50-day moving average. So this is exactly where we hit today. If you just look at the high, it was 2,275. So we have 2,281 was it. So we pretty much touched it right here. Maybe they can get through it, but if we just start going to like a daily chart on it to take a look at really how much, say, gas is in the tank for the bulls here, you can see they still have a little bit of room on it. So they, eventually they could push up. But if we just take a look at a 60-minute chart, this is where things are pretty exhausted right now. And, the bearish divergences are there. They've never really taken any clean break. And this is just a bearish rising wedge. If you're going to go into the encyclopedia or something and look for what a bearish wedge is going to look like, it's something like this, where we're just getting very cornered up here. And either they're going to blast it through, which means they have to get through the weekly moving average on top of these bearish divergences in place, as well as not really taking any breather since we got to go all the way back to February 12th. So yes, there's a lot of reasons on why they're we could see a pullback start. Price has not reacted yet, so until it does, the bulls are still driving the bus. But the touch of the weekly moving average, I think, is kind of important on that. And if they are going to take a little breather this week, would make perfect sense on it. And really, I just wouldn't get too bullish on these markets at this point. We don't, these types of moves, we've seen what happened to them. Once they top out, we go straight back down again. And it's just one of those things that, maybe this time will be different, but not with the really just the exhaustion that I'm seeing on the breadth charts, and that's what I showed you yesterday. As well as just not taking any breaks whatsoever, and we have the S&P that's traveled over 200 points from the lows here, and like I said, we haven't had the momentum line even go below the 50, so it's bullish with price wise. But what happens is you just get very the markets get very exhausted, and they run out of buyers, and then we retrace them back. So we're still in the in the resistance area, bearish divergences. We on the 15-minute chart we have bearish divergences, and on the weekly we have the the Dow that just hit the 50-day moving average. So it's it's one of those things that I just think that there's a lot of risk right now jumping into the markets at this particular time. And maybe they're going to use the Fed to try to move it up, but I don't really believe the Fed is going to say anything that is going to shock the markets. They're pretty much going to be just going business as planned, and I don't think anything new is going to be said. So right now, let's just keep an eye on things. Like I said, until price actually cracks, the bulls are in control. But there's, I don't believe now is the time to be jumping on the bull wagon. You want to at least wait for some kind of test of support and make sure it holds. And if it does hold, then possibly you can look long. But right now, I just don't don't really like that trade. So with that, let's see what plays out tomorrow, and have a great night.